If you don't take these 5 steps right now, your portfolio is going to go to zero. We're looking at a lot of craziness in the markets right now, and Miles Deutscher just put out another banger of a thread this very morning, and I have a breakdown for you, the 5 tips, and then Deezy's analysis on this. Plus, we're going to tie it back to Warren Buffett, everybody. So here he said, if yesterday scared the piss out of you, you're making a few major investing mistakes. It's okay to make them once, but don't do it again. These are the 5 rules you must follow to avoid getting wrecked and losing your hard-earned money that you put into this crypto market. So number 1, always set invalidations. That's kind of a weird thing to say, and it doesn't really make a lot of sense off the top of your head, but when you buy a coin, always have an invalidation clause, meaning if it no longer is the reason you bought something, it might be the reason you need to sell something. So if you bought Bitcoin because it's the digital store of gold and it's just one of the best secured networks in the entire planet, if it lost those 2 narratives, maybe you wouldn't want to buy Bitcoin. Now, I don't think Bitcoin will ever be replaced as digital gold, but just using that as an example. And say Solana meme season would be another example. You're buying Solana because all the attention is there. All the memes are there, and then people quit posting about memes. Would have been a good time to get out of Solana. You could have got out at $200 and then rebought in at $111 like we did. Now, Miles has a quick example. If Bitcoin breaks 60K, he'll sell 30% of his position, but Warren Buffett has a really good invalidation quote here. Truly great business must have an enduring moat that protects excellent returns on invested capital. And if you ask, what does a moat mean in business? It's a competitive advantage or your ability to maintain your market share and profits by protecting yourself from competitors. An example would be Coca-Cola. They have fountain drinks all over the place. They have a system in place for distributing their syrup. They have a good moat because all the ties-ins with movie theaters, McDonald's, what have you. And so it's basically protection from competitors. Another example would be the Google Play Store on your Android device. But now let's go to tip number 2, and we're going to roll through. And number 5 is probably the scariest quote. When I show you what they're talking about, you're going to say, is this Warren Buffett guy kind of evil, everybody? And Miles' tip is, if you're going to do risk, do it at the start of a move, not the end. It's impossible to know how long a move will last. But generally speaking, if you smell smoke, there's likely fire, and it will correspond with a technical breakdown. And so essentially, it is just saying sell early. It's worth losing 5% to protect against a 50% drawdown. What does Warren Buffett have to say? Rule number 1. Never lose money. Rule number 2, never forget rule number 1. All right, let's quickly roll into number 3 here. Number 3, keep a decent chunk of your portfolio in stable coins. This is something I did not listen to this recent dip. I didn't have enough stable coins on the sidelines, wasn't able to make as big a move as I wanted. If you're bullish in crypto in the mid to long term, this might be counterintuitive, but shouldn't you be all in? No. Why? Because on dips, you won't have the dry powder to maximize these opportunities. What does Warren Buffett have to say? Cash combined with courage in a time of crisis is priceless. He also said, always be liquid. This is from his letter to shareholders in 2008. We're almost talking about over 15 years here. I have pledged to you, the rating agencies and myself, to always run it with more than ample cash. We never want to count on the kindness of strangers in order to meet tomorrow's obligations. When forced to choose, I will not trade even a night's sleep for the chance of extra profit. So you can see right there, always be liquid, everybody. Let's roll into number 4 here. Don't hold too many altcoin positions. This is something I am very guilty of. I have way too many CNTs, Cardano native tokens. I might need to consolidate that. I'll do a video if I do and tell you what I sold. But over diversification is detrimental as it lowers your chances of outperformance. By holding 30 altcoins, what you're doing is creating an altcoin index. But the bigger issue is with holding too many comes during the major dips. How can you manage 30 positions during a crash? He thinks 10 to 20 assets is the sweet spot, and you can even make the argument for 5 to 10 high conviction positions as well. I definitely have more than 10. I have less than 50. I definitely have too many altcoins, and I'll go ahead and say 15, 20 probably is the sweet spot. I like to have a few players in a few different industries on a few different chains, and trust me, folks, I know those numbers can skyrocket pretty quickly. Next thing you know, hey, I have 100 altcoins. And if you're wondering, what does the Oracle of Omaha have to say on this? Well, awesome advice here. The more you trade, the more you underperform. And here's his letter to the shareholders, 2005. Now we're almost 2 decades ago. Long ago, Newton gave us 3 laws of motions. It was the work of genius, but it didn't extend to investing. He lost his entire stack in the South Sea bubble. I don't know if he had Bitcoin then. He explained later, I can calculate the movement of the stars, but not the madness of men. If he had not been traumatized by this loss, hey, he might not have gone to discover the 4th law of motion. For investors as a whole, returns decrease as motion increases. It's just a fantastic quote to live off of. Now let's go to number 5. And I said, this is a scary one. This is one that makes me think, is Warren even a nice guy? I thought he was like a nice grandpa. Now I'm not so sure. Buy when there's blood on the streets. This is actually a famous quote from this guy right here. Buy when there's blood on the streets, even if the blood is your own. I look in his eyes, and he's probably a nice guy there. Big shakeouts are a wealth transfer event from the foolish to the savvy. The experienced players lick their lips when there's opportunity to buy fear. I love this write-up from 2008. I'll go ahead and pause here. Anybody want to read that, you can go ahead, zoom in. But folks, Warren Buffett has fantastic advice here as well. And this is where I'm saying he sounds almost cutthroat and ruthless. The best time to buy a company is when it's in trouble. He takes it another step further. The best thing to happen to us is when a great company gets into temporary trouble. We want to buy them when they're on the operating table. This is far from a nice grandpa. He said this back last millennium. So this is timeless advice from Warren Buffett and Miles Deutscher. Like I said, he's always making the best threads on X. But folks, if you don't take these steps, your portfolio could get wrecked. So I'm just here trying to protect your investments because, folks, we've been calling the bottoms. We've been calling the tops. We're in a trade right now. We're about 636%. Looks like I've maybe lost about 7% down. We're still over 600% in profit on this trade. And so I use these tools to identify the bottom. I wish I had more cash on the sidelines. I can't get it right every time. And I'm Deezy, and I'll see you in your Berkshire Hathaway stock maybe at the top.